Ladies and gentlemen, Christopher Aaron here. It is December 5th, 2018. Welcome back. I'm glad to have you here. There are some different topics that I would like to discuss with you tonight in this week's broadcast. And specifically, we're looking at the different pictures here, and we're looking at a gold mining operation here below the surface. And we're looking at, what is this, an image, a representation of Bitcoin. And you think, well, what do these two things have to do with one another? Gold miners and Bitcoin. And I want to tell you what they have to do with one another. This is a time where we can see patterns that are developing in the Bitcoin market that have to do with what is coming in the future for the gold mining sector. And I want to tell you how I see this shaping up. And furthermore, I want to challenge you to begin to think about your journey as an investor, your journey as a student of the markets alongside us here. I want to challenge you to see that as not only something that applies to one asset class, whether it's Bitcoin, whether it's gold or the gold miners, whether it's silver. I want to challenge you to think about this from a longer term perspective, which means that you want to get to a point where you can recognize these patterns that are setting up across all different markets, not just gold, not just silver, not just Bitcoin, but across all these different markets. And if there's one thing that I could say here that I believe in, it's that these patterns that we look at week after week, they apply across all different markets. And so we look at something like this. I want to bring this up before we get into the main part of the broadcast. This is something that I vehemently disagree with. Okay, this theory of Wall Street. And we're talking about this book that came out, published by Burton Malkiel in 1973. This book called A Random Walk Down Wall Street. And this is based on some theories that had been published over a few decades prior to him. But he really popularized this theory. We're talking a Princeton economist. And this is a very popular book amongst the mainstream investment advisor community. And what does this book really talk about? Obviously, this could deserve your read if you really want to get into this. But just to summarize it, the author here, Mr. McKeel, is talking about that markets are completely random. That we can't have any idea whatsoever whether markets are going to be moving higher or lower tomorrow or next year or in the future or at any point ever. We can't know anything. That everything is random. So therefore, what you should do is just buy all index funds. Just buy index funds, buy a little bit of everything, and you'll get some of the things that are right. That's the theory of this book, okay? And so he goes on, if you look at the summary here, he talks about technical analysis. This is what I'm big on. And then there's fundamental analysis. So he's saying there's significant flaws in both these forms of analysis and that most investors will produce inferior results compared to passive strategies. So I think this point here is key. Most investors. Do you want to be like most investors? Do you want to be like the average investor that has no idea what they're doing and every paycheck they just contribute money to a 401k plan and hope that it goes higher and hope that they retire at the right moment where then they can withdraw funds from that fund and retire comfortably? Do you want to be like most investors? Because that's who theories like this are speaking to. And he's not just discounting technical analysis, which, we get our share of critics here. We talk about squiggly lines on a chart, as people like to say. Yes, absolutely. Very powerful squiggly lines representing price. The most important thing that one can observe in a market is price. But he also discounts fundamental analysis. So if you say, well, I don't believe in chart analysis, but I believe in the fundamentals, this guy is saying, well, you're wrong too, because you can't know anything about the fundamentals. You can't know anything about manipulation. You can't know anything about central bank control of fiat currency. You can't know anything, is what he's saying here in this book. And what I'm saying is this book is one of the most popular theories for mainstream investment advisors around the United States, around most of the developed world. They pretty much agree you can't time, you can't really know what's happening, so therefore just buy a bunch of everything. And I say this is complete hogwash. And I'm going to show why. So we're talking about gold miners versus the Bitcoin price here. And I want to rewind you in history a little bit in this broadcast, this own broadcast here that we do every week. And I want to bring up the exact chart, okay, from when just over 1 year ago, November 29th, 2017. This was the chart of Bitcoin. And if you're invested in Bitcoin right now, just before anyone gets defensive or passionate either way, I want to tell you that I think there could be a future for Bitcoin. There could be some positive uses for the technology, and maybe even eventually it goes higher from here. However, it's going a lot lower first. And Bitcoin was showing all the signs of a classic bubble, a classic mania, when 1 year ago, and you can go back in the archives of this channel and watch the video from November 29th, 2017, where we said, is Bitcoin a bubble? And I was calling this a bubble. And what price was I calling this a bubble at? It was just over 11,000. Okay, it had spiked above 11,000 and come back to just over 10 by the time I hit record on the video from 1 year ago. And why was I saying this was a bubble? It was due to technical analysis. It was due to the fact that we had seen this 3.5-year base, this long-term base. You can see where the price had reached just over 1,000 and had traced back down and had moved sideways for 3 years, right, in this range below 1,000. And then it broke out. And so we were talking about this as a long-term base. And then we saw a pattern here that after these initial first couple of swings higher had moved into this completely parabolic. Okay, we're talking exponential function on this curve, parabolic, where it's gaining 1,000 every single day for a number of days in a row. We're saying this is showing all the classic signs of a bubble. Very similar to the 1929 crash in stocks. Very similar to some of the NASDAQ stocks in the year 2000. Very similar to the price chart of condominiums that were selling in cities such as Las Vegas and Miami in 2006 and 2007. Okay, so this is not unique just to Bitcoin, but we're talking about the nature of this graph. This is technical analysis. This applies across all markets. This is the point that I'm trying to make here. So we were looking at that book called A Random Walk Down Wall Street, and what he's saying is you can't know anything by looking at a chart. And we are rejecting that here flat out. Now let's look at why. Okay, so I was calling that this was a top. I said I can't predict the exact date, but it's getting ready for a top. And furthermore, I said this thing, when it gets ready to crack, is going to fall all the way back down to the long-term base. It's going to lose 90% of its value. It's going to come back to the base near this 1,000 level. So let's fast forward to today. We move this chart ahead by about 1 year, and we can see what has happened here to the Bitcoin chart. Now, keep in mind, this is where we made that call for the bubble top, okay? Right here above 11,000. This is where we made the call. Here was that stage 1 base resistance level we're talking about. Such a powerful pattern. We'll come back to this when we get to the gold miners. This is what I want to bring to your attention. How did we see this top forming? Now, we didn't get the exact peak 100% right? So Bitcoin went from 11,000 up to almost 20,000. It almost doubled again, but you only had 2.5 weeks. You only had 2.5 weeks to chase this higher, and then boom, the thing fell out from underneath itself. And over the next 6 weeks after that, it went from 20,000 down to 6. Okay, losing, what is this? Almost 75% of its value. So we did not get the exact top, but notice time-wise, we got pretty close. When you consider this entire run-up that began in late 2016, and here we are almost a year later, and then you had 2 weeks left, and boom, the floor fell out from underneath this. How did we get that? That's because these patterns, these parabolic patterns, where a market is moving, we're talking about in an exponential function, where it's moved from a linear trajectory to an exponential function, which takes the shape, when you're looking at a linear scale, it takes the shape of something that is going almost vertical. When you see this, it doesn't matter which market it is. It doesn't matter if you're talking about stocks in the NASDAQ bubble in the year 2000. It doesn't matter if you're talking about condominium prices in Miami and Las Vegas in 2006. It doesn't matter if you're talking about stocks before the crash of 1929. Anytime you see this type of chart, this is technical analysis. This is showing you that something is unsustainable. Nothing can continue at this type of acceleration. And so you reach this point here where literally everyone who is going to buy Bitcoin has bought Bitcoin. People are giving targets of 50,000, 100,000, 1 million Bitcoin, right up here. Remember a year ago, everyone was talking about that. Everyone who was going to buy has bought, and therefore, what does that mean? It means there are no more buyers left. Just think about how ironic that is. At the most bullish moment, when everyone is screaming that the price is going to go higher and higher and higher, that means there are no more buyers left. And what can happen then? Only one thing. Only a collapse. So we were looking at this over the last year, this descending kind of triangle here that we're talking about. You can see the number of hits here close to that 6,000 level. And I was just sitting back and I was watching and I was saying, this is not anything I want to be involved in, this descending triangle. I had a lot of people telling me, hey, it's bottomed here at 6,000. It's getting ready to go back to 20 and then back to 2 million or whatever. I was just saying, no. The pattern says no. And then we see this breakdown here, back below 4,000. Now, what is coming next? And we'll bring this back to the gold mining sector and to market analysis in general. We're talking about the rejection of the random walk hypothesis. We flat out reject that book and its proponents. Why? Because things can be known about markets. Things can be known. Parabolic charts can be seen, and we can at least say, if we don't catch the exact top to the day, we can at least say this is not a market that we want to participate in here, and we can save ourselves a whole lot of pain. Now, so what is coming next for Bitcoin? I do think that there is something of a counter trend rally that is setting up over the short run, and then Bitcoin should be falling all the way back to its stage 1 base resistance level, somewhere just above this 1,000 figure. This will represent almost a 95% decline from the exact peak. This is very typical of long-term bubbles. I think Bitcoin could even fall back below the $1,000 level in 2019, and then it will base and it will move sideways as a net sum, perhaps with some quite volatile swings, but it'll move sideways as a net sum for years. Now, is there value in the technology? Absolutely. Can this technology be incorporated into something that really functions as an anonymous payment processor of some sort to circumvent the banks? Absolutely. That would be wonderful. But this technology is not going to be a speculative asset for many, many years. So if you're still holding, or whatever they call that acronym, if holding on, if you're still doing that now, thinking if I just wait one more month, boom, we're back to 20,000. I would tell you it may be time to play this final bounce here and then look to get out, unless this is a very small percentage of your portfolio, 3%, 5% of your portfolio that you're looking just, hey, I want to invest in the technology for the long run. But I don't think this is going to be any sort of a speculative asset with easy gains to come. That has passed. This is the power of technical analysis. You cannot pick the exact top, but you can absolutely save yourself a whole lot of pain from something that is unsustainable, as Bitcoin was 1 year ago. So the power of these stage one bases, back to what I was talking about, Bitcoin versus the gold miners. Remember that stage one base. Where is it here on the gold miners chart? This is the stage one base. We're looking at the gold miners as a percentage of the U.S. economy, okay, the XAU to the S&P 500 ratio. Once again, now think about this. These types of stage one bases are even more powerful when the asset in question cannot go to zero. Keep that in mind. So Bitcoin, could it go to zero? Or could another cryptocurrency go to zero? Come on, let's be honest. With how many were created? Several hundred of those cryptocurrencies. Some of those can go to zero. You had better believe it. And some of them will. So you have to be careful with any one cryptocurrency because it can go to zero. The thing can be wiped out. Whereas the gold miners, as a percentage of the U.S. economy, cannot go to zero. And what more? This is the lowest value that we have ever seen. Ever. So we are getting into a period of time here where on this channel, for example, you can see the analysis, how it worked for Bitcoin, right? Anyone who listened to the analysis here on this channel 1 year ago saved themselves a lot of money. And so technical analysis, right? Studying price, studying patterns that exist in nature and in the markets. If this is something that is interesting to you, and if, like me, you reject the random walk theory proposed in 1973 by the Princeton economist, if you reject that and you say human beings move in patterns, the markets are the sum of human nature, and therefore we can observe patterns. We can't get everything right with every single tick, minute by minute, but we can get the big patterns higher. And so we had an unsustainable blow-off mania developing in Bitcoin 1 year ago. And what do we have? What's the opposite of a mania? It's just a total apathetic environment toward the gold mining sector right now. So we are going to be covering, this is what I wanted to say, we are going to be covering more markets here in this channel. We're going to be expanding. Why? Because the basing process, that stage one base, as we showed in the gold miners, this could still take some time to play out. Now, it's that chart that has me so excited about the future of the gold sector when we're talking about a long term, right? It can't go to zero, and it can go thousands of percentage points higher. But this could take some time to play out. So for that reason, we are going to start covering some additional markets on this channel. You can see the power of that with Bitcoin. And we're going to cover some more markets. And there is going to be opportunity for individuals who want to invest or trade in other markets. There are going to be opportunities to recognize unsustainable charts in either direction, just like the Bitcoin chart. And we're talking about some other markets here. We're talking about oil, natural gas, copper, platinum, palladium. We're talking about other commodities, currency cross pairs. So all of this is coming. And I would just say, if you are a precious metals only investor, and there's nothing wrong with that, if you are a precious metals investor, which I am one as well, do not fear. We are going to continue covering the precious metals markets on this channel here on a regular basis. We are going to expand that. We're going to cover some additional markets going forward as well. So I just want you to know all of this is coming because this type of analysis applies across the markets. The study of patterns in human nature applies across all aspects of human life. The premium service that I do produce about precious metals, as I said, because I believe there's a special place for precious metals, and this will be produced for as long as I am capable of producing it. That is available on the website. As I said, there is perhaps the greatest opportunity from a long-term basis that is setting up in the precious metals market. You can see that on that chart that we showed, the XAU to S&P 500 ratio. So that is why that service is available. You can find out more on the website, but we cover not only gold and silver in that, but the entire mining sector, the individual companies that we are going to be buying when we see the next bottom setting up. Flash updates go right to your inbox as well. If you are completely new to this stuff and you want to speak to someone, that someone would be me. If you want to speak to someone who does not sell the metals, but I look out for individual consultation clients as my sole goal, then please know that you can reach me on the website under the consultations tab. It's a pretty reasonable fee, and I'm entirely supported by subscribers. I want to thank the Patreons. I extremely appreciate your support for these videos. If you do want to support these free videos, if you get something out of it and you don't want to subscribe to the other services, I completely appreciate it. Make sure to hit the subscribe button if you just want to watch the videos for free so you know when these are going to be coming out, because there are going to be more of these parabolic curves shaping up. Things are getting crazy in the stock market. Things are getting crazy in the bond market, if you ask me. So first time that we have potentials for these parabolic curves setting up not only in stocks, but in bonds simultaneously. Last time this happened was in the late 1960s into the 1970s. And what do we see then? In the later part of that decade, we saw the most massive precious metals bull market of all time. Keep in mind, though, I just said in the later part of that decade, right? So there can be a delay between the time that the fundamentals are setting up and the actual price action is observed in the metals themselves. Keep your eyes open. Be careful who you listen to. Study the patterns that are visible in human nature and the broader part of nature around us. And I'll see you this time next week.